Hey folks, Vic here with your weekly trade video for Friday, October the 11th, 2024. I did something that I haven't done yet for our weekly videos. I went back into the archives and found an old video from 2019, 5 years old, that I'm posting once again. And it was on the topic of making money in the Forex. And the reason for this, me doing this, is to illustrate to you how consistent we've been in our message and how we approach our trading. I think you'll find great value in this video because the message is so important to understand and accept. In the video, I referenced a few support resistance levels, so keep in mind, and I did this using my clunky old charts I used to have, but it was only to illustrate a concept. So keep in mind that the levels I show are not necessarily levels that we'd trade at, with the exception of the one that Darko showed. Without considering, higher time frame trends, advanced market flow, basically all the things in Darko's trading circle that should be considered before a trade is taken. I also noticed that I said something about getting a pre-market analysis for free. That was back then. That's not something that's being offered with this video, so I just wanted to needed to clarify that. I really hope you enjoy the video, and if you do, please remember to hit the like button. It was kind of interesting for me looking at it after all these years, and hopefully you can see how consistent our message has been over the many years of running this service. And the advice I give is well worth listening to, in my humble opinion. Okay, here is the video. Okay, let's dig into this topic. Can you actually make money trading the Forex? And I say here, not if you make these mistakes, and most people do. There is a very distinct pattern that traders follow when they decide that they want to give Forex trading a try. And I see this happen over and over and over again. And here's how it goes. They find something on the internet or maybe on YouTube that looks pretty juicy. So they buy the course or join the service or whatever it is, and then away they go. And quite often, a new trader will go on a nice little winning streak. And of course, that feels really nice. I mean, who doesn't like to win, right? And maybe they even start doing some calculating, extrapolating about how much money they're going to make in the next coming year and how they're going to be able to retire and trade full time, because it seems pretty easy. Well, we all know that inevitably they're going to start having some losses. And you know what most people do when that happens? They start to deviate from their system or their game plan, and they start tweaking. Maybe they start making money again after that. But again, losses will set in. And what's going to happen, it's going to start to cast doubt on the system. And then it's time to get on Google or YouTube. And I'll just move ahead to this next slide here, because this is what happens. They get on Google or YouTube and they start looking for the next shiny object. And folks, this is a pattern that repeats itself over and over and over. And with new unsuspecting traders, of course. And it will absolutely ensure that they'll never become consistently profitable. Okay? And the reason is because they actually don't believe that there's no such thing as the Holy Grail. They think that there is one. And there are all sorts of system vendors out there trying to convince them that they have it. Okay? So they get on this old hamster wheel here. Now you might say, well, it's all very nice and very philosophical of you, Vic, but how do you fix it? How do you get past these problems? And this gets into, expectations, which are like huge, okay? Really, really important here. And like I say, easy to say, that they're important, but very hard to embrace proper expectations. So the first thing that you need to come into is to come into the training arena with proper expectations. And this is huge. And one of the interesting things about trading is that the mindset needed is kind of contrary to everything that we were taught throughout our lives, i.e., winning is good, losing is bad. If you do well on your test, you get an A. If you get too many wrong answers, maybe you'll end up with a C or a D. So you'll get rewarded by being right and punished by being wrong. And this is a paradigm that most people are stuck in. It's what they've grown up with. With trading, if you have that mindset, you're going to struggle, and in fact, you're likely you'll never make it. There needs to be a paradigm shift away from the old belief that you need to win all the time to a new paradigm that allows for losses and accepting those losses as totally okay. And in fact, as an integral part of winning. If you think about it, ironically, a big winning streak is one of the most dangerous things that can happen for someone who doesn't fully understand trading. If you believe and you understand that trading is an odds game, then if it's an odds game, then by default there must be some losses, right? Casino owners, they're playing an odds game all the time, and the odds are stacked in their favor. But of course, they do not win all the time, do they? But they don't care, because obviously they understand that over time, because they have an edge, they're going to come out ahead because the odds are in their favor. There is a greater chance of one thing happening over another. And this seems pretty obvious, something we can all say, yeah, we get it. But the truth is, when it comes down to it, and you're sitting there with 2 or 3 losses in a row, how do you feel about that? And you say you're new at this, what happened? Almost all traders are going to start doubting what they're doing. And this, folks, is generally the kiss of death and the beginning of that cycle I just talked about earlier, the hamster wheel. They're going to start the hunt for a new and what they think is a better system, and on it goes. What about expectations when it comes to returns on your account? Boy, this is a big one too. I'll give you an example, and I'll preface this by telling you that most hedge fund managers would be ecstatic, very, very happy to consistently return 25% a year. They can attract literally billions of dollars if they have a consistent track record of that kind of returns, 25%. And I'll give you a little stat that I just read. Listen to this. From January 1994 to October of 2018, it's at 24 years, through both bull and bear markets, of course, the passive S&P 500 index outperformed every major hedge fund strategy by about 2.25% in annualized returns. And remember, these hedge fund guys are supposed to be experts. So can you imagine how popular a hedge fund would be if it returned 25% a year on average over that time? They wouldn't be able to handle all the money that was being thrown at them. So let's say you opened an account with $500, and after an entire year you made 25% or $125. Well, let me ask you this. How would you feel about that? Would you say, this stuff doesn't work, I only made $125 after an entire year? See, a lot of people think this way, so they move on to something else and get into that losing cycle again. Here's the thing. They just made a better return than a very well-run hedge fund, but their expectations were very much different. They read somewhere that you can make 20 pips a day or $500 a week or whatever it was every day, and it's frankly, it's BS, and it's totally misleading. So the first thing that the new trader needs to do is get a firm grip on expectations and start working on the acceptance of losing as part of a winning strategy and the proper expectations of returns. This needs to be treated like a well-run, risk-managed business, not like a place to come and gamble, if you want to last long-term, that is. So what can we do to gain confidence? Well, the best thing to do is lots of backtesting. So, for example, if we show you how to draw proper levels of support and resistance, the way that we do it, and we tell you that price usually, not always, reacts around those levels, then you can go and backtest that. Prove us wrong. Go have a look at it for yourself. You don't ever have to take anybody's word for anything. Now, that's just one aspect of what we look for, because we don't necessarily buy or sell because we're at a key level. But we use those levels to key off of. Now, actually, you'll see very, very quickly, too, if there's any validity to using support resistance levels the way that we teach. In fact, let me show you. I'm going to show you an example right now of a trade that we are in. Well, a lot of people are out of it now. But first of all, let me just show you this. If you look at and you can do this with any chart. If you pick a level, okay, like here, okay, and I'm just going to thicken that line up so you can see it, make it thick. When price hit that level, what did it do? Well, it bounced off it here initially, and then came back down into here, didn't it? There may have been an intraday trading opportunity there. I'm talking about day trading now. And you can use this for any kind of trading. You can do this on a weekly chart, a monthly chart, or whatever chart you want. I'll tell you, though, that the higher time frames have way more strength. What happened when price hit this level? Pretty nice bounce, I'd say. What about when it hit this level down here? Okay? That hit it, and it bounced up very nicely there. There may have been a nice intraday opportunity. When it came down to here, obviously, we had a reversal in here. Right, the trade that we are in today, and you can go do this with any chart over and over. I encourage you to do it. You see this resistance level right here? We use the close of the body of the candle, by the way. That level, 109.13, price came down to that level to the pip, 109.13. And this candle action, this is one of our advanced candle action trades, told us that, we should be looking to buy. And my Coach's Corner partner, Darko, puts out a pre-market analysis video. You can actually get that free if you in the text below this video. He alerted everybody to buy the next day, and we got it right down near the bottom. Some people have taken profit, like 3-to-1 reward risk trade on this really nice trade. So yeah, that's an example of back testing. Okay, works really good to get your confidence. One final thing that is a sure way to eventually ruin your trading account is over leveraging. And I know that some people are going to roll their eyes up when they hear this, and they think it's just fine to risk 5 or 10% of their account or whatever. I've been doing this for a very long time, and I can tell you that I have never, ever seen anyone last long term who over leverages. Never. I've seen some remarkable run-ups in their accounts, very short term, big, doubling their account and all this. Eventually, though, it comes crashing down. Everything in this business is about risk management and capital preservation. That's what you are, a risk manager. Go ahead, risk whatever you want. That's up to you, not me. It's your money. But for us, we never risk more than 0.5% on any one trade. And believe me, you can do very well with such low leverage. In fact, my Coach's Corner partner, Darko, I just mentioned him a minute ago, he recently had a single day of a 6% return in a day, only risking 0.5% on any one trade. That's an exceptionally good day, but just goes to show you what can happen. Unfortunately, in the Forex business, you can find brokers out there who offer like 400-to-1 leverage. It's just absolutely crazy. And if you use that kind of leverage, you're not going to last long term. That's been my experience anyway. So again, this video is 5 years old, but the message is as true today as it was back then. Thanks again for taking the time to listen to this video, as well as all of our other videos. We really do appreciate it. And yeah, that's it. So, have a smashing weekend, and we will see you all next week with another weekly trade video. Take care.